Tesla, it seems like it's a company that's everywhere these days.
Yeah.
But do the financials like match the hype? I mean, that's kind of the big question, right?
Right.
You want to know if their stock is a good buy.
Mm-hmm.
And frankly, so do we.
Yeah.
We've got this recent analysis from a financial blog, and it's packed with data.
Cool.
So get ready. We're about to do a deep dive into the numbers behind this electrifying company. I mean, haha, get it.
Yeah.
Electrifying.
I got it.
Okay, I had to.
I like it.
I had to.
So what I think is really interesting about this analysis is that it doesn't just like tell us what Tesla's financials are.
Yeah.
It tries to figure out what they mean,
Right.
which is like, that's key because Tesla's stock performance has been so unusual.
Yeah, it has.
It's been a bit of a roller coaster.
Yeah, it's been well, I mean, over 1,200% growth in the past 5 years alone.
Yeah.
That's incredible, but it also makes you wonder, like, is this sustainable?
Exactly. To figure that out, we need to look at valuation. Is Tesla's stock price, is it actually justified by its current financials
Right.
and its potential for future growth?
Yeah.
One of the key metrics that they use to assess this is the PE ratio,
Okay.
which compares the company's stock price to its earnings.
Mm-hmm.
Tesla's is currently 87.86. Now, to put that in perspective, think of a well-established company like Coca-Cola. Their PE ratio is around 25.
Okay.
Even high-growth tech companies like Amazon, they're sitting around 95.
Mm-hmm.
So Tesla's is high, but it's not like completely out of line with other companies that are expected to grow very rapidly.
Right. It's like everybody's trying to guess how big Tesla's going to get, and that's reflected in the stock price.
Yeah, that's a great way to put it.
Yeah.
This analysis also uses something called intrinsic value, which is a way of estimating what a company is really worth based on its future cash flows.
Okay.
So they used a tool from alphaspread.com, and their calculation suggests a base case intrinsic value of $163.07 per share. That's quite a bit lower than the current market price.
Yeah, that's a pretty big gap. But before we get too worried, let's look at like the positive side of the equation, right? So Tesla's sales have been on fire.
They have.
I mean, they've almost quadrupled in just 5 years, from $24.58 billion in 2019 to nearly $97 billion in 2023.
And it's not just about selling more cars, they're also becoming more profitable.
Right.
In fact, their net profit margin, so the percentage of revenue they keep as profit, has been steadily increasing.
Mm-hmm.
They're actually beating out giants like Toyota in some years when it comes to profitability.
That's pretty impressive. So you've got this incredible sales growth, increasing profitability.
Yep.
Are there any warning signs, any red flags that we should be looking for?
Well, one thing that stands out in the analysis is the difference between Tesla's net income and its operating cash flow.
Okay.
So net income is like, the profit you see on paper, but operating cash flow is the actual cash coming in.
Gotcha.
From the core business operations.
Yeah.
Ideally, those two should be pretty close.
Yeah.
But in Tesla's case, there's like a little bit of a disconnect. Their net income has been steadily rising, but their operating cash flow has fluctuated, even declining in 2023.
So they look good on paper.
Yeah.
But the cash flow situation is a little bit more complicated.
Yeah, a little bit.
Okay.
Definitely something to keep an eye on.
Gotcha. Okay.
And another interesting point from the analysis is about Tesla's retained earnings.
Okay.
This basically refers to the profits that the company keeps and reinvests in the business.
Right.
Instead of paying them out as dividends to shareholders.
Yeah.
Tesla's retained earnings have gone from negative to significantly positive in recent years.
Okay.
It's a clear signal that they're prioritizing growth over giving cash back to investors right now.
Which kind of makes sense, I guess, given their, high PE ratio, right?
Exactly.
Investors are betting on that future growth, hoping it's going to pay off big down the line.
Yeah. Exactly. But it's a long game.
Yeah.
And not everyone is comfortable with that level of risk.
Right, right. Speaking of risk, what about their cash position? I mean, do they have enough cash on hand to support their, pretty ambitious growth plans?
Well, they're definitely sitting on a decent pile of cash, around $29 billion in 2023.
Okay, that's good.
But here's where it gets a little tricky.
Okay.
Their cash ratio, which measures their ability to pay off short-term debts with readily available cash, is actually under 1. Which, that's not usually a good sign.
Yeah.
But in Tesla's case, it might just reflect their confidence in their ability to generate more cash in the future.
So are they being overly optimistic, or do they have, a solid plan to keep the cash flowing?
That's a great question.
Yeah.
And it leads us into the next part of our analysis.
Okay.
Efficiency and investment.
Here's where it gets really interesting. Hold on to your hats, folks.
So to understand Tesla's efficiency, we need to look at these metrics like return on assets.
Okay. And return on equity, ROE.
Gotcha.
These basically tell us how effectively they're using their assets and investments to generate profits.
Right.
And both of those have been strong, but they've dipped a little bit recently.
Is that a cause for concern?
It's not necessarily.
Okay.
It could be due to their aggressive investment strategy.
Go.
They're pouring money into expanding production, building new factories, developing new technologies, and these investments, they can take a while to pay off.
Right.
You know, impacting short-term profitability,
Yeah.
but potentially leading to greater returns down the line.
So it's like a little bit of a balancing act.
Exactly.
Spend now
Yeah.
to potentially earn more later.
Exactly.
Yeah.
And one thing that highlights Tesla's commitment to this kind of growth strategy is their capital expenditure, or CapEx.
Okay.
They're spending a significant portion of their earnings on things like new equipment and facilities.
Yeah.
In 2023, their CapEx was almost 60% of their net income.
Wow.
Now, for comparison, a lot of value investors prefer to see that number around 25%.
Wow. So that's more than double.
Yeah.
That's more than double the typical benchmark.
Exactly.
It really shows how much they're betting on the future.
It does. And it makes you wonder, will these big bets pay off? So the analysis includes some stock price forecasts,
Okay.
and they're pretty optimistic.
All right.
One prediction suggests that Tesla's stock could reach over $1,000 by 2025
Okay.
and over $2,000 by 2030.
Those are some eye-popping numbers.
Yeah.
But are those forecasts, are they realistic
Yeah.
or are they just wishful thinking?
That's the million-dollar question.
Uh-huh. Yeah.
Those forecasts are based on assumptions about Tesla's continued dominance
Right.
in the electric vehicle market
Yeah.
and their success in expanding into other areas like energy storage and things like that.
Right.
And there's no guarantee that those assumptions will hold true.
Right. It's like trying to predict the weather 10 years from now.
There are so many factors that could influence the outcome.
Exactly. And that's why it's so important to do your own research.
Yeah.
And not just rely on forecasts.
Right.
The source also mentions analyst ratings, which can provide some insight.
Okay.
But even there, the opinions are mixed.
Yeah.
Some analysts are recommending buying Tesla stock, while others recommend selling or holding.
So even the experts aren't sure what to make of Tesla. It seems like they're just as divided as everybody else.
Yeah, and that's okay.
Okay.
It's a complex company
Right.
operating in a rapidly changing industry.
Yeah.
There are no easy answers.
Right.
But this analysis gives us a framework for thinking about the key factors
Yeah.
that will determine Tesla's future success.
Okay. So we've covered a lot of ground here,
We have.
from valuation and profitability
Yep.
to cash flow and investment strategies.
Yeah.
What are some of the key takeaways that you think our listener should be focusing on?
Well, I think the main point is that Tesla is a company with a lot of potential,
Yeah.
but also a lot of risk.
Okay.
They've got incredible growth, strong sales, and they're really pushing the boundaries of innovation. But their high valuation, their aggressive spending, and the uncertainty of the EV market create a lot of unknowns.
It's like a high-stakes poker game.
It is.
They're going all in on their vision of the future,
Yeah,
but it's not clear yet if they have the winning hand.
that's a great analogy.
Uh-huh.
And for you, the listener, the question is, are you comfortable playing in this game?
Right.
Do you believe in Tesla's vision enough to take on the risk?
And how do you even begin to make that kind of decision? I mean, it's not just about crunching numbers.
Absolutely not. You have to look beyond the data and consider the bigger picture.
Right.
What's happening in the electric vehicle market as a whole.
Yeah.
How are competitors like Ford and GM, how are they catching up?
Right.
And what about Tesla's expansion into other areas like solar and energy storage?
It's about understanding the whole story, not just a snapshot in time.
Exactly.
Yeah.
And it's also about understanding your own investment goals
Mm-hmm.
and risk tolerance.
Right.
Are you looking for short-term gains?
Yeah.
Or long-term growth?
Mm-hmm.
How much volatility are you comfortable with?
These are all important questions to ask yourself
Yeah,
before making any investment decisions.
for sure.
But there's one more thing I think that's worth considering,
Okay.
and it's something that the source didn't really touch on. What about Tesla's reliance on a single very visible leader?
Right.
Elon Musk.
Yeah.
I mean, he's a visionary, no doubt, but he's also, like, known for being unpredictable and sometimes even controversial.
Yeah, that's an excellent point.
Yeah.
Elon Musk is undeniably a key part of the Tesla story.
Yeah.
His ambition, his drive to innovate.
Yeah.
Those things are kind of woven into the company's DNA.
Yep.
But it's true that his personal brand can be both a blessing and a curse.
Yeah.
His actions and pronouncements, they can send the stock price soaring or plummeting.
It's almost like investing in Tesla means you're also investing in Elon Musk.
Yeah.
And that adds another layer of complexity to the decision.
You could say that, yeah.
Yeah.
It's a unique situation.
Yeah, definitely.
It makes you wonder, what happens to Tesla if Elon Musk isn't at the helm?
Right, yeah.
Can the company continue to thrive without his leadership?
That's a tough question.
It is.
But it's one that I think investors need to grapple with.
For sure.
So as we kind of wrap up this deep dive into Tesla, what are your final thoughts? What should our listener keep in mind as they weigh the pros and cons of investing in this company?
I think the biggest takeaway is that Tesla is a company of paradoxes.
Okay.
They're a leader in innovation, but their valuation is based on a lot of assumptions about the future.
Right.
They're financially strong, but their cash flow situation raises some red flags. And then there's that Elon Musk factor, which adds a whole other dimension to the equation.
It's a fascinating case study, and it really highlights the challenges of investing in a company that's trying to, change the world.
Yeah.
I mean, there are no easy answers.
No.
And there's no crystal ball to tell us what the future holds.
Exactly. But by digging into the data, understanding the risks and the potential, and considering the broader context, you can make a more informed decision about whether or not Tesla's is the right investment for you.
And ultimately, that's what this whole deep dive is all about, right?
Yeah.
We're not here to tell you what to think or what to do.
Right.
We're just here to kind of give you the tools and the insights you need to make your own decisions.
Exactly.
Yeah.
So for those of you considering Tesla, remember to weigh the potential rewards against the inherent risks.
Yeah.
Think about your investment goals,
Right.
your risk tolerance,
Yep.
and whether you believe in Tesla's long-term vision.
And perhaps, most importantly,
Yeah.
keep learning and stay curious.
I mean, the world of finance and technology is constantly evolving, and there's always something new to discover.
Thanks for joining us on this deep dive into Tesla.
Yeah.
It's been a fascinating journey,
It has.
and we hope you've enjoyed the ride.